Hello friends, we are going to continue with share capital. Now we are very near to the end of this chapter, right? In the share capital, we were discussing about reissue of forfeited shares, right? This is what we were discussing about. In this we discussed that it can be for three types: at par, at premium, or at discount, right? So these were the three types that we discussed, that reissue of forfeited shares can be at par, at premium, or at discount. Clear? Then we discussed about two things: that all forfeited shares are reissued, right? All forfeited shares are reissued. Then second thing, all forfeited shares are not reissued, right? So this is what we have discussed so far about reissue of forfeited shares, right? Now what we are going to discuss in this lecture is forfeiture and reissue of shares issued on pro-rata basis, right? There were some shares who were allotted on pro-rata basis, and these shares have been forfeited and then reissued, right? Then how to deal with these kind of shares, that is shares that have been allotted on pro-rata basis and then the shares are forfeited and then they are reissued. Then how to deal with this situation, that is what we are going to see in this, right? For this, what we are going to do is we are going to solve one practical problem, right? Let us see the practical problem. It says X applied for 2000 shares of rupees 10 each at a premium of 2.5 per share. There was Mr. X who applied for 2000 shares, right? He was allotted 1000 shares. Pro-rata allotment, that is for every 2 share he was allotted 1 share, right? After having paid rupees 3 per share on application, he did not pay the allotment money of 4.5 per share, including premium. That is, in 4.50, 2.5 is the premium and 2 rupees is the allotment money, right? And on his subsequent failure to pay the first call of rupees 2 per share, his shares were forfeited. These shares were reissued at 8 per share, credited as fully paid up. Now, I told you when we did pro-rata basis that whenever you have the pro-rata allotment, always first find out the two things. The one is excess application money received. Second is amount of allotment money that is received or receivable, not received. Right? So that is what we are going to calculate first. Right? Always do two things first. First is, I'll say working note 1, calculation of excess application money received. Right? shares applied. How much shares were applied by Mr. X? He applied for 2000 shares. And how much were the shares allotted? Shares allotted were 1000. So how much was the excess applications? 1000 shares. So on these 1000 shares, you must have received the application money at the rate of rupees 3. Right? You have received application money of 3. So excess application money received. Now this excess will be adjusted towards allotment. How much? On 1000 shares at the rate of rupees 3000. So 3000 is the excess money that you have received along with the applications, and this excess money is to be adjusted towards allotment. Right? Second step, find out the amount that is due towards allotment. Calculation of amount receivable on allotment. Right? Now, what is the amount due on allotment? First of all, tell me this amount. On 1000 shares, because you have allotted 1000 shares, how much is the allotment money? 4.5. Right? Including the premium of 2.5. What is the total amount due? 4.5. That is 4500. Now you will adjust excess application. Excess application money. How much? 3000. See? 3000. Right? So, how much money was now due on allotment? Amount receivable but not received. Amount receivable but not received is rupees 1500. Now I have a question for all of you. Answer this question. In this allotment money, there were two components. One is the share capital and one is the securities premium. Right? One is share capital, one is securities premium. Now, I ask you, this amount of 1500 belongs to whether the share capital or the security premium. That is, whether share capital has not been received or securities premium has not been received. How will you find out that? Try to think about it. Try to play with the questions. Right? Okay. I'll tell you how to find out this. What was the total amount on allotment? 4500. This 4500 had two components. Right? One was share capital. Other is securities premium. Right? What is the amount of share capital on 1000 shares at the rate of rupees 2000? Right? And securities premium 1000 shares multiplied by 2.5, 2500. So, in this way, 4500 was total due on allotment. Now you have 3000 rupees, that is the excess application money that is to be adjusted on allotment. Now here I tell you an interesting point. You have 3000 rupees. First, adjust this money towards share capital. First, adjust this money, 2000. Right? So, anything receivable from share capital? No. What is left here? Minus 2000. 1000 excess application money we still have with us. After adjusting the money towards share capital, we still have 1000 rupees in excess money on application. Then this excess money will be adjusted towards securities premium. See, 2500 was receivable on securities premium, and what we have received? 1000. So 1500 is pending towards securities premium. This 1500 is pending towards security premium. Right? So always divide this amount into two components: share capital, securities premium. Whatever excess application money you have, first adjust towards share capital. Then whatever is left will be adjusted towards securities premium. Write down the note regarding this. See, these notes are very important for you. Right? Excess application money is first adjusted towards share capital, right? And if there is any balance left, left in excess application, it will be adjusted towards securities premium. Clear? So do write down this note, friends. Clear? If the excess application money you have, it will first be adjusted towards the share capital component. Then if anything is left in the excess application, that will be adjusted for the securities premium account. Always remember this. Right? So now can we pass the journal entries? Let's move on to journal entries. First journal entry will be for forfeiture of shares. In the forfeiture, what is the first account that is affected? Share capital. Share capital account on 1000 shares. What is the called up money? What is the called up money is 3 per share on application, 4.5 on allotment, 7.5 plus 2 rupees on first call, 9.5. Okay, I'll say 9.5. But friends, we have to subtract securities premium amount from this 9.5. Why? Because the securities premium is never a part of share capital. It cannot be freely used for operations of business. So the total amount that has been called as 7 rupees. 7,000. Now, do you have anything related to securities premium? Yes, sir. This 1500 securities premium reserve has not been received. Remember the case of securities premium reserve? We dealt in two cases: forfeiture, when the security premium reserve has been received, or the securities premium has not been received. That is why I showed you this bifurcation, because this 1500 that has not been received on share allotment is on account of securities premium and not share capital. So if you have not received the securities premium reserve in your pocket, then what will you do? You will debit it. You will say securities premium reserve account debit with how much? 1500. To forfeited shares account, how much? On 100 shares, on 1000 shares, you received 3 on application. Have you received anything on allotment? On allotment, the amount of share capital that was due was 2000. And you have received this 2000 in the form of excess application money. So how much money you have received? Plus 2000. So in all, 5000 is the amount that you have received. Understood? How this 2000? Because you have received this 2000 rupees, the amount due on share capital part, as excess application. Right? In the forfeited shares, we only take the part of share capital. Clear? Now, what is next? Calls in arrears, or I will take individual calls here. To share allotment account. What is due on allotment? You have calculated here 1500. Simply write 1500. Right? And to share first call on 1000 shares, you didn't receive the first call of 2 rupees, that is 2000 rupees. Is this entry clear, friends? Forfeiture of shares. Share capital is debited with the amount of capital only, not securities premium. Right? Then the securities premium that has not been received on the allotment, after adjusting excess application money, that amounts to 1500. How this 1500? I have shown you the bifurcation here. Right? Then this 1500 will be debited. And what is credited to forfeited shares? Forfeited share reflects the amount that you have received towards call, amount of capital that you have received, not premium. Right? So you have received application money of 3 rupees, plus you have received 2000 on allotment as excess application money. Right? So this 5000 you have received in forfeited shares. Now what you have received in share allotment, 1500 is not received. This we have calculated here. Then what else you have not received? Share first call of rupees 2000. Right? Now read the question. They say his shares were forfeited. These shares were reissued. That means all the shares have been reissued at the rate of rupees 8 per share. Face value of the share is 10. It has been issued at rupees 8. That is at a discount. What is the entry if the shares have been issued at a discount? Bank account debit. Now in the bank, what money you have received is 8 rupees, 8000. But share capital, you have to credit with the face value. That is 1000 shares multiplied by 10,000. Then how to compensate this 2000? That will be through forfeited shares account. That is 1000 multiplied by discount 2000 rupees. Clear? You all know this entry. Now I told you, in case of reissue of shares, to the extent of shares reissued, there will be a capital gain. To the extent of shares reissued, whatever there is a balance in the forfeited shares account, that will be transferred to capital reserve account. Now can you tell me what is the amount in forfeited shares? 5000 is credited here and 2000 is debited here, what is the net balance you have? You have 5000 rupees in your pocket. You take out 2000 rupees from that pocket. What is the balance? 3000 rupees. So this 3000 rupees is your gain. I'll say forfeited shares account debit to capital reserve account. How much? 3000. How this 3000? Total amount of forfeited shares was 5000. Out of this, 2000 has been adjusted for discount on reissue of shares. What is the balance left? 3000. So this 3000 is a capital gain and is transferred to capital reserve account. Clear? So this is how you deal with forfeiture and reissue of shares which were originally issued on pro-rata basis. Always remember, when you have the pro-rata question, find out these two things: excess application money that is to be adjusted and the amount received or receivable on allotment. Right? Then I showed you the bifurcation also, that in this 4500, this share capital part is 2000 and securities premium part is 2500 and excess application money is 3000. So first you will apply this excess application money towards share capital, then whatever left will be applied to securities premium. Right? So this 1500 which is not received on allotment is on account of securities premium and not share capital. Clear? Why this bifurcation is done? To pass this entry. Clear? I hope this is clear, friends. So with this, our forfeiture is completed. I've tried my best to make you understand each and every concept of forfeiture. This is very important, friends. Keep in mind. If you have any queries, feel free to send me an email at ksteaching@gmail.com. Right? Because your concept clarity is very important for me. Right? If you have not understood the concept, write down what concept you have not understood in the email. I'll try to reply in the easiest ways and the understandable way so that you are able to understand. Right? So in the next lecture, what we are going to do is employ stock option scheme, ESOP. Employee stock option scheme. Right? This is not very important topic from the examination point of view, but we have to cover it. Right? So I will just touch upon this topic and wrap up share capital. Clear? So this is what we are going to do in the next lecture. So that's all for this lecture, friends. Thank you so much.